Hello friends, my name is Ketan Agarwal. I am a financial advisor. I am here to simplify the stock market for you. As I understand, stock market is very complicated place but it can make you rich. Every week I pick up a stock and simplify it for you so that you can take your buy or sell decision. Last week I did long-term analysis of KEI Industries, which is a wire company, and today I am going to do long-term analysis of Sanghi Industries, which is a Gujarat-based cement company. So let's start. So today we are going to do long-term analysis of Sanghi Industries, which is a Gujarat-based cement company. So before we move forward, I would like to request you to subscribe to my channel so that you do not miss any informative video like this and do not miss the opportunity in the market. And this video I'm going to make in the English language. If you are comfortable with the Hindi language, then you can find the link below in the description for the same video. So let's start with the long-term analysis. Introduction. Sanghi Industry is a Gujarat-based cement company having capacity of 4.1 million tons, and they also owns 63 megawatt power plant and a port. So this power plant which they own is for their own personal use. And with the help of this power plant, they generate power and it is used in the production of cement. And they have a port which is used for the import of raw material and export of finished goods through this their own personal port. And it is one of the lowest cement producer due to its quality limestone, which is available at a close proximity. That's why they are also having the second point is locational advantage. So they have a very huge they're having a quality limestone reserve in very huge quantity first, and they are having locational advantage because that limestone is located at the very close proximity and other raw materials are available at the close proximity. And this company is situated, like the factory is situated near the sea, so that again they're having locational advantage because while importing raw material, the cost of transportation is less, and while exporting finished goods through the sea, again there is a they save money on the transportation cost. And they have strong integration across the manufacturing chain. So because of this low cost in the production and transportation of this finished goods, they save lots of cost in the production. If you see here, Sanghi industry cost per ton is like around 2766, whereas the industry average is 3603 rupees. So there is gap of around 950 rupees just because of this because of the cost saving done in the transportation cost. So some of the major strength is like they are having access to 1 billion tons of quality marine lime reserve, and this will allow the company to increase their production capacity over the next 10 to 15 years. Okay. And limestone reserve is located at close proximity, and again this is a very big advantage for the company because they are going to save lots of cost because it is situated at the close proximity, and limestone is like one of the major raw material. And limestone reserve have deposit at the surface. Okay, so they can extract by surface mining. They don't have to do the conventional technique, like they don't have to use the conventional technique where they have to do do with the blasting and all. So because of the limestone available at the surface, the cost, again lots of cost savings are done here also. And the production capacity, if you see, is expected to increase from like 4.1 million tons to 8 million tons over the next 2 to 3 years. Again, this is a very good thing for the company because if the production increases, obviously they're going to enter in the new market and the sales will improve and finally profit and the value of the company. And they have, as I told, they have strong integration across the value chain, production value chain, and they having captive power plant and captive jetty, which this is used for in the factory. The power plant is used for the production, and jet is used for the import of material and export of cement, outward movement of cement. And their company is also planning to acquire two ships, and which will lead to again more cost advantage because of the coastal mode of transportation. So some of the major strength, like we saw, and that strength also in a sort of way they're having also like some sort of cost advantage, the strength, like cost advantage also having some of the points. You'll see the same what we saw in the major strength. Some of the points you're going to see here also in the cost advantage. Like as I told, limestone reserve is located at the close proximity, just 3 kilometers away. So here they having close like cost advantage because of the major strength they are having. Also it is also a cost advantage for the company actually. And if you see, limestone is available at the surface mining as I told before. So again there is a cost benefit here also. Other raw material like laterite, clay, silica are also available at the close proximity of like 10 to 15 kilometers. Again there is a huge cost saving here also. The bid price for limestone mining is on rise, like if you see in the recent past. So the bid price for the like mining of the limestone are increasing. So the companies which are already having very good reserve of limestone will have cost advantage in the future, because they paid very less amount compared to the players which are other players which are paying very huge amount now. So the older player company having good reserve like Sanghi Industry 1 billion tons they're having. So the companies like this are going to have significant cost advantage over the competitors. The recent commissioning of the like conveyor belt for Siemens transport is also is expected to further reduce freight cost for limestone as well. And the grinding unit is at the close proximity of 10 kilometer from the clinker unit, so which provides a crucial logistic advantage. And as I told, like captive port is used for inbound fuel and outbound of cement cargo, which again ensure like lots of saving in port charges. So now we are going to see major fuel cost advantage. Like first point, if you see from the left top, Sanghi Industries has one of the largest multi kiln. This allows the company to use cheapest source of fuel. Okay, the kiln which the company is having, that can use multi fuels, like anything it can be used. So the major source of fuels are coal, pet coke and lignite. The fuel mix are 66% lignite and 34% coal. So the company is using more of the lignite, like 66% and 34% coal. So coal and pet coke are imported. So the cost of fuel is very less for Sanghi Industries, as lignite is available at close proximity to 30 to 35 km. And the cost of lignite also fell after it brought in a GST of 5% versus 18% pre-GST. So again the company is having significant cost advantage here as well, because they are using more of lignite which is available at cross proximity, and it is cheaper. It becomes cheaper compared to the past. Also, if you see, increase in import duty on pet coke and give competitive advantage Sanghi Industries, as a company uses more of lignite as fuel. So other companies are using more of pet coke and coal, and there is an increase in import duty on those products. And Sanghi Industries are using lignite more, and because of that, Sanghi Industries going to have benefit, whether other companies are going to have disadvantage because of the increase in import of pet coke and coal. And there is also increase in demand. Like if you see, healthy demand is likely to come from western region during FY 17 to 20 due to increase in infrastructure spend in Gujarat and Maharashtra. And companies likely to see significant gain in market share. The company is planning to double its production capacity. Demand for cement is likely to improve due to increase in infrastructure activity post good monsoon. We saw like India is having like had good monsoon in the last 2 years, so the infrastructure will improve in the western region, like in smaller towns and villages, because farmer had like good agriculture. And also in Gujarat is lots of projects are coming in the Gujarat as well. If you see bullet train projects are coming and all, and there are like 4-lane road are coming in the Gujarat, like Bhavnagar to Tilaja, which is 256 km. Again a 6-lane road project is coming, which is Kishangarh to Udaipur to Ahmedabad. So this type of thing are going to give lead to increase in demand of the cement. The company is also planning to expand into other markets. Like at present, they sell 90% of production in Gujarat, but post increase in production to 8 million ton, the company is planning to expand to Maharashtra and Kerala, which are high price market. So again the company is going to have benefit here, because the company are not planning to use the road mode of transport. They're going to use the sea for transportation of goods to Kerala and Maharashtra. Again, companies buying its own ship, and they have their own port, so there's lots of cost advantage here as well. And in the raw material they are having cost advantage, and so because of this the company will have very like, and they will be able to sell at a little higher price compared to the, they will have like better profit margin compared to the competitors, because they are having significant cost advantage, and they will be able to sell at the much cheaper price. Despite of that, company will have much more like better profit ratio compared to the competitors. Now if you see the financials of the company, reserve cap like equity, I have taken on the important figure here, I have not taken everything. So if you see here, equity share capital of the company is same from the last 5 years, which is a very good sign. Reserve of the company like has improved from 619 to 894. Long term borrowings of the company is quite same in the last 5 years, and it is actually reduced from the last year, which is again a good sign. But it's, if it reduces further, then it will be very great, because the company will save lots of like fixed costs on interest, and the company's profit will going to improve. Short term borrowings is something which I'm little concerned about, because it is increasing at like constant, if you see constantly it is increasing, which is a bad sign actually, and this should improve. We need to watch this closely. If we see improvement in loans like long term borrowings and short term borrowing, then it will be good, very good for the company. And also if you see trade payable, again there is an increase in trade payable as well. However, from last 3 years it is reducing, but again it is not a good sign. Asset of the company, if you see trade receivable on the other hand, so it is not increased, it is actually quite same from last, like it is in the same range actually, not major increase in the trade receivable compared to the trade payable. Same loan, short term loan which a company has given to others, which is again not very good loan companies are having, which is not going to give major return in that term also. Okay, so there is an improvement we are it should come in the borrowing part, otherwise other things are fine. Profit and loss account, if you see here, again sales, if you see from 2013 to 17, there is no major improvement in the sale. Actually there is a downfall in the figure, mostly because of the reduction in cost and price of cement in for this particular company, what I'm thinking. But and if you see also like expenses, there's an improvement in the expenses actually in percentage. So total expenses reduced from 95% to 93%. This was in the 2013 to 2017. So total expenses were 95% of the total revenue in 2013. Now it is 93% of the total revenue. So there is an improvement in total expenses, which was lead to increase in profit margin. So if you see, profit margin was 4.22% in 2013. Now it is 6.31%. So there is an improvement we can see here. But there is a further improvement should come once the debt of the company reduces and efficiency of the company improve further. Then there will be improvement here also. Now we are going to see quarter result. Quarter result, if you see September month, there is a fall like compared to the other months. The reason is because the demand during the monsoon is for cement will be like very less. No one construct at this period. So for all the cement companies it will be less. So we don't have to worry about it during that time. But however, if you see, there is a fall in sales during this period. However, there is a rise from like there is a fall here in this 2 period. But good sign is there. If you see here, the operating expenses was 79.64% of the sales, now which is came down to 77.29% of the sales, which is a good sign. Therefore like there is an improvement in the EBITDA margin. If you see, from 20 it was like 20.35% before, and now it is 22.7%. so there is an improvement in the EBITDA margin because of the increase in efficiency of the company. And if you see constantly, like operating expenses are reducing 79 to 78 to 77, and on the other hand EBITDA margin improved from 20 to 21 to 22.7. so it's a very good sign. Here in this graph you can see our cost is falling and the EBITDA margin is improving. Ratio of the company, if you see, there is no major improvement in the ratio as well. EBITDA margin is around 18 constant. EBIT margin is also same. Profit after tax margin is small improvement. There is a fall here because of some uh, extraordinary item in the loss in the balance sheet. That's why there is a major fall. Otherwise, if you see, it is quite going in the same range, but however little improvement is there. Return on asset, there is improvement here, and return on equity, no major change again. So PE ratio, if you see, Sanghi Industry trading at 41.54, industry average is like 35.91. So this particular company is trading at a premium, little bit of premium compared to the industry. But how, I think the company deserves this kind of premium, because the thing is, if you see, there's lots of advantage companies are having. So we saw like lots of improvement in the company, like the company is having lots of competitive advantage, like their limestones are available at the close proximity, which will give them major cost advantage. The company is located close to the sea, again they will it will that will give lots of cost advantage in terms of transportation cost, and they can they're expand also planning to expand in the new market, and the company has the opportunity to double and improve their production over time because of the huge quantity of raw material available, and the fuel which they use are also cheaper compared to the other companies, because it is available at close proximity, as well as other companies are using more of pet coke, which is like their import duties on those things are gone up, whereas on the lignite GST has came down to 5% from 18%. So this type of advantage the company is having, and this which will give the company the opportunity to sell their product in the new market at a much cheaper price compared to the existing player, right? So this will have the very this should give the very good benefit to the company in the long run. So I think if we should invest in the company like this, if you are not satisfied like what my analysis, you can consult, you can do a little bit of your own research, or you can consult your financial advisors, and or you can contact me like below into the mail, or some you can comment and you can ask me if you need any further clarification. So what I feel, like if you invest in a company like this, which is a growing company and lots of opportunities we can see, and lots of advantage we can see for the for this particular company, then definitely we should invest in a company like this for a long period of time, like 10 to 15 years, and I'm sure this company is going to give very good return in the future. So if you like my video, please subscribe to my channel so you do not miss any informative video like this in the future. And I'll be I keep putting videos like this in a 15 days or a week. And so please subscribe, and if you like my video, please click on the like button, and if you have any query, you can please comment below in the comment box, or also you can share my video with your friends and colleagues so that even they can uh, make use of video like this and they can have benefit. Okay, see you next week. Bye.